Hello friends, and welcome back to another round of tax knowledge. Today friends, I am not going to discuss any particular decision but a legal proposition. Friends, today is 6th November and tomorrow is 7th November, that is the last date of filing the return of income for assessment year 22-23. So it occurred to me, what is the relevance of a due date of filing the return of income? What would happen if I do not file return of income in time? And my talk is specifically related to a case where we have to claim certain deductions or exemptions like deduction under section 80IA, 80IB, 80IC, etc., or exemption under section 10A, 10B, 10C, or let us say we have had recently sections 115, BAA and BAB relating to preferential rate of tax of 15% or 22% as the case may be, which also requires certain compliances to be done before the due date of filing the return of income. So what would happen if I fail to file the return of income in time within the due date? Then what would happen to these deductions, exemptions or benefits if the return is not filed in time? So this is the proposition which I thought I'll discuss today. Friends, the due date of filing the return of income has always assumed importance and has been reiterated by the Supreme Court time and again. You would recall the first decision of Supreme Court in the case of Goetze 284 ITR 323, which held that if the assessee has missed to make a claim of deduction in the return of income, then he cannot raise it for the first time before the assessing officer, since the time limit to file the return of income has lapsed by the time assessment come into play. Then we have recent decision of Supreme Court in the case of Wipro Ltd 446 ITR page 1, where it was relating to exemption under section 10B, where the assessee wanted to withdraw its continuous claim of exemption under section 10B, and as per section 10B 8 of the Act, the option of withdrawing the claim of exemption has to be preferred before the due date of filing the return of income along with the return of income itself. The Supreme Court again held that we have to strictly construe the exemption provision of section 10B, and if it requires that option of withdrawal to be filed before the due date of filing the return of income, and if it has not been done, then that option cannot be treated as withdrawn, and therefore the assessee was perforced to claim exemption under section 10B, and if there is a loss, he cannot claim the benefit of carry forward of that loss. This is the recent decision of Supreme Court in Wipro Ltd. Then friends, we have had earlier decision of Supreme Court in case of GM Knitting 376 ITR 456, where it held that you will be aware that there are many deduction provisions like 80J, 80IA, 80IB, or additional claim of depreciation under section 32, which requires that if you are preferring such additional claim of deduction, then it has to be accompanied by an audit report, and that audit report also has to be filed along with the return of income before the due date of filing the return of income. The Supreme Court in this case of GM Mittal held that this requirement of filing the audit report is mandatory because it quantifies the claim of deduction, but the requirement of filing the audit report before the due date of filing the return of income is directory in nature. So it held that yes, audit report has to be filed. It has to be filed along with the return of income, but the due date thereof is directory in nature. So how do we reconcile two contradictory stands coming from the Supreme Court? One saying that it is mandatory, all the exemptions have to be claimed before the due date of return of income, and on the other hand, there is another earlier decision of Supreme Court which says that the return of income filing is mandatory, but the requirement of due date is directory in nature. Friends, in order to reconcile these decisions, in my view, we need to make distinction between a exemption provision and provisions other than exemption, like deductions under section 80IA, 80IB, or a provision relating to preferential rate of tax under 115 BAA or BAB of the Act. Exemption provisions on the one hand are which completely exempts income before entering the gross total income, that is sections 10A, 10B. The Supreme Court in an earlier decision has held that the computation mechanism is deduction, but because of its placement under chapter 3 of the Income Tax Act, it continues to be an exemption provision. And the deduction provisions, as I said, are where the income after we have computed total income, they are reduced after computation of total income, they are called deduction provisions, that is ATIA, ATIB, ATIC, ATJ, etc., etc. And similarly, the provision relating to preferential rate of tax is also not an exemption provision, but a provision different than an exemption. Supreme Court, in the case of Dilip Kumar, which was relating to interpretation of taxation provisions, more particularly where the exemption is available under the indirect tax provisions, the Supreme Court laid down two propositions. It held that the provisions relating to exemption of under a taxing statute have to be literally construed, have to be strictly and literally construed, and there is no scope of liberal interpretation. That was the first proposition. The secondly, Supreme Court held that in an exemption provision, we have to make a distinction between substantive conditions and procedural conditions. If substantive conditions are satisfied, they have to be satisfied by reading the exemption provision strictly. If on strict construction of the substantive provision, they are satisfied by the assessee, then non-compliance of procedural provisions have to be liberally construed. So taking clue from this decision of Supreme Court, which has even been endorsed by the Supreme Court in the latest decision of Wipro, where they have held that the provisions relating to strict interpretation has to be distinctively understood in case of an exemption provision and in case of a deduction provision. So by applying the decision of Supreme Court considering 10B as an exemption provision, Supreme Court in Wipro held that the requirement of making withdrawal of section 10B before the due date of return of income is a mandatory provision. We have to strictly construe section 10B because it's an exemption provision, and therefore that benefit cannot be allowed to the assessee. So, but in the same breath, the Supreme Court held that we are deviating from the earlier decision of Supreme Court in GM Mittal, which related to claim of additional depreciation under section 32, as also under section 80J. They held that we are deviating from that decision because that pertained to deduction provisions, whereas 10B claim in the case of Wipro was pertaining to an exemption provision. So friends, on the basis of that, what we have to see is that can we make a distinction between a benefit which is sought to be claimed before the due date of return, whether it is an exemption provision or it is a provision other than exemption, that is reduction or a preferential rate of tax. In my view, yes, insofar as the claim relating to exemptions contained in 10A, 10B, 10C is concerned, the requirement of making a claim or withdrawing that claim before the due date of return of income is mandatory, would need to be strictly construed. But when it comes to provisions other than exemption, like deduction provisions under ATA, ATB, despite there is a specific mandate under those sections, read with section 80A5 or 80AC, which requires that return of income has to be filed before the due date, the taking clue or applying the decision of Supreme Court in the case of GM Mittal, what can be construed as, yes, the requirement of preferring the claim of deduction or a preferential rate of tax in the return of income is mandatory, but the requirement to file that return of income before the due date is directory in nature. So in case I have missed to make a claim in the original return of income, or I have not filed the return of income at all before the due date, and I have subsequently filed a belated return, or I have revised the original return of income, if in the belated return or in the revised return I have preferred these claims, then the first condition of raising the claim in the return of income, which is a mandatory condition, stands satisfied. The other condition of filing the return of income before the due date, which was belatedly filed, or a claim was taken in a revised return filed later, then the condition of due date would need to be read as a directory condition, a procedural compliance, which if made subsequently would need to be liberally construed. And I'm not raising this proposition, I'm not raising a blanket proposition. I'm supported by a recent decision of Pune Bench of Tribunal to the aforesaid effect, wherein also the Honorable Tribunal has reconciled the decisions of Supreme Court in GM Mittal and the latest decision of Supreme Court in Wipro Finance to come to the rescue of the assessee, to hold that since it was a deduction provision in that case and not an exemption provision, the decision of Supreme Court in Wipro Finance would not apply, and it being a deduction provision, which although the assessee claimed in the return of income, which was raised at a later stage after the due date of filing the return of income, the requirement of filing the return of income before the due date, the Pune bench of tribunal held that was directory in nature, and therefore it was held that the assessee was eligible for the claim of deduction under the relevant 80 provision, that was 80P in that case. So friends, this was a proposition which I thought I'll discuss today. After the decision of Supreme Court in Wipro, there has been a confusion as to what would happen if the return is not filed in time, or how do we reconcile with the provisions of section 80A, 80AC, which specifically requires that the claim has to be preferred in the return of income, and that return of income has to be filed in time. I think we can take help of the earlier decision of Supreme Court in GM Mittal and a specific caveat in the decision of Supreme Court in Wipro Finance to come to a conclusion that the requirement of due date is only directory in nature. The provisions have to be liberally construed, and on liberal construction, the due date is to be considered as directory. And even if the return is filed belatedly, we can help the assessees to sustain their claim of deduction or preferential rate of tax under sections 115BAA or BAB of the Act. Thank you, friends. I hope this will help all the assessees or professionals in assisting their counsels wherever there is a lapse in raising such claims in the due date or before the due date of filing the return of income. Thank you, friends.